Our trade on C Limited stock, ticker symbol SE, has now returned over 100% profit. And the same wealthy investor we've been tracking, the one that led us to this winning trade, is now placing a new trade worth $7.9 million. And so in this video, we'll break down how this same wealthy investor is now trading C stock. Is it still bullish and buying, expecting it to move higher, or bearish and selling, expecting it to drop lower? We'll also show you how we updated our options trade using the same strategy from this wealthy investor to manage risk and protect gains, a smart risk management strategy that can be applied to other trades. Now, if you're in our membership, you've already started to profit from C stock. That's because we entered a trade position just a month ago, after the earnings rally, on this day, August 12th, when we first detected an unusual trade on C stock. So our members made strong profits by riding it all the way up as it broke out to a new high. What makes it even more interesting is that just before the stock took off, this same wealthy investor bought stock options in a very unusual way. Our system picked it up, and so we sent an alert through our membership. As you can see here, this was the email we sent to members, alerting them of unusual option activity detected on August 12th. And so we analyzed those unusual options in C stock and went long bullish when the stock was trading around $172 per share. Now it's trading at $196 per share. So even if you traded the stock instead of options, it's already highly profitable because we simply got in early. And so if you want to start getting access to these profitable trade alerts, including these email updates, consider joining the membership on our website. We'll put a link here. Keep in mind that if you join the membership through YouTube instead of through our website, we cannot email you these additional trade alerts because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website, where you'll get full access to the trades of wealthy investors and potential insiders so you can see what the smart money is doing before the trade becomes highly profitable. Now, speaking of profits, how much did this options trade actually make? Because knowing the exact profit is what allowed us to use a smart risk management strategy and set up our next trade based on the new data. So let's take a closer look at our trade, the same one made by this wealthy investor, these October 17 options at the 180 strike calls. At the time, this investor bought 6,000 contracts at a price of $9.15 each. Since options prices are shown here, and each option contract controls 100 shares of stock, to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each options contract costs $915. So how much return on investment did this deliver? Well, let's take a look at our original trade using the risk profile graph, analyzing these October 17th options at the 180 strike calls, which were priced at $915 per contract when we entered this trade. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already includes the cost of the trade. That's why you can see on the blue line that if the stock had dropped down, it would have been a negative $915 loss, the entire cost of the trade. But instead, it went higher to about here. So we have a profit of $1,121 per contract. And so to calculate the profit percentage, we take the profit of $1,121 and divide it by the initial cost of $915 and then multiply by 100 to express it as a percentage. And that gives us a return of 122% profit in just 1 month. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. because understanding where smart money flows gives us deep insights into potential stock moves in the market. The rich often have more access to exclusive research and information, sometimes even leaked insider information that help them make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, if you want to get access to more of these insights from the rich, then just head over to our website. We'll put a link up here where you can see exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. That's why we do not follow just any wealthy investor. We track the smart ones who are highly strategic. Because based on the latest data, this wealthy investor wasn't just making a new trade. They used a risk management option strategy that we often use ourselves to minimize losses while maximizing profits. So let's go over how we use the new data to adjust our trade here into a strategy that gives us more upside potential while managing risk to reduce losses. And so, as we can see here on the options time and sales tape, unusual option activity happened on September 12th at around 12:35 and 12:20 p.m. For these October 17th options at the 180 strike calls and the November 21st options at the 200 strike calls. But remember, these October 17th options at the 180 strike calls are the same options from our original trade. So what's going on here? Well, based on our deeper analysis, this same wealthy investor was closing their previous positions at the 180 strike calls to lock in profits and then rolled into new positions at a higher strike price and a later expiration date. This means that these November 21st options at the 200 strike calls are the new open trades. And these contracts were being traded at about the same options prices of $15.80 or $1,580 per contract. So we can estimate the total cost this wealthy investor spent by multiplying this price per contract by the total number of contracts traded. So how many contracts did they actually trade? Well, let's check the option chain. But first, let's take a look at our original trade for these October 17th options at the 180 strike calls. Notice how these contracts are now worth between a bid-ask price of $1,930 to $2,050, compared to just $915 when we entered this trade. That's why it turned into such a profitable trade now. And we can see that there's about 3,000 contracts still open. And remember from our email, this wealthy investor initially bought 6,000 contracts, so half of them have already been closed. So just like what they did, we also closed our 180 strike calls by selling them, locking in profits, and then rolled to a later expiration date, the November 21st options, and to a higher strike price at the 200 strike calls. Here you can see our new position marked as POS, which stands for our position, and the green color indicates a buy position. And notice there's around 5,000 contracts opened here. So we can estimate the cost of this new trade. We have about 5,000 contracts multiplied by $1,580, the same price we saw earlier on the options time and sales tape. And this equals a total trade cost of approximately $7.9 million for this new trade. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. With that said, even though this trade carries higher risk, We still took it, but only because we locked in profits from our original trade, just like how this wealthy investor did, by using an options rolling strategy to reduce exposure and manage risk. In other words, we used profits from our original trade to buy these 200 strike call options. That means we entered this new trade at a lower cost, reducing our risk by using gains from our earlier trade. And so when we analyze our trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same October 17th options at the 180 strike calls. So we are just left with the 200 strike calls that expire November 21st. And so on the graph, we can see that if C stock drops from where it is now, our trade would not have any negative loss unless it falls significantly lower. And even then, the loss would be small. This is how we manage risk by minimizing losses while still staying in the trade to gain more profits if the stock moves higher. But keep in mind, this was only possible because we followed that smart wealthy investor early, back on this day, before the stock surged to a new high. So if you want to get access to our analysis and alerts, just like this one, before the stock took off, then sign up on our website. We'll put a link here. Because the next time a wealthy investor makes an unusual trade, you'll want to be in early, not chasing after it's already gone up. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.